God bless everybody today. It is December 18th of 2024, and I want to do a market update because Jay Powell made his rate decision today, and so I wanted to give you a heads up on what that decision was and how it's affecting all the markets tremendously today. So Jay Powell came out and made some pretty strong statements which shocked the markets today and sort of sent them in sort of a death spiral that I think is going to play out as we move forward in the next month or so as we get into this transition with Trump. But this affected the markets tremendously today. It affected gold, silver, Bitcoin. It melded the bonds up, so the 2 and 10 both melded up, which is going to cause a real problem for him because Jay's lowering rates as bonds are melting up, and that's not making any sense to anyone. As inflation's also moving up, he shouldn't be lowering rates because he wants to be somewhat restrictive so people don't spend money, which causes inflation because that's what it's about. You got to slow down the spending of people's habits so that slows the economy down, which brings inflation down, and his employment rate numbers aren't as good. So he's having high unemployment numbers, and so he's not hitting any of his mandates. The other mandate is that he's supposed to be coming down to a core 2% rate. It's in his opinion, are based on what's on the books around 3.3%. I truly believe it's much higher than that. It's probably more like 4 or maybe even higher than what they're showing us. And I think that will average out as we watch this transition with Trump get in. They'll have to pull the second set of books out. They'll have to actually tell us what's going on out here and how they've been manufacturing numbers of jobs through government or illegals, and how inflation is much higher than it truly is. So the reason the markets were shocked today was when he came out and lowered the rate. They knew that was going to happen. They knew he's going to cut by a quarter. He shouldn't be cutting at all. Actually, he should not have cut back the last time at 50 basis points because inflation and the 2 and 10-year bond keep melding up. He's trying to catch up to the 2-year bond. The problem is he's behind the ball, should have already caught up with the 2-year bond, and so he's going to miss it, and it's going to meld up as he's melding down. So that's what's getting ready to happen, and so Jay Powell's getting ready to make a critical error here. Because of this, it made no sense to anyone out here. Even if you go out and look at the business channels and a lot, they do not understand why he's cutting, why he cut the last time. When your inflation is going up, the job numbers are going down, and your economy is really going into a no growth phase, as they're telling us that it's transitory soft landings and everything's going to be beautiful, and that's just not the case. So let's go through some charts. We're going to go through gold, silver, Bitcoin, bonds, a dollar, and a few other things to give you a feel for what's happening out here. And all these things matter to you, especially if you're indebted through loans of subprime, prime cars, commercial homes, things like that, credit cards. This all affects you. And so when we saw him do this today, it affected the markets tremendously. So let's look at those numbers. So you'll notice when Jay came out at 2 o'clock, I believe it's Eastern time is when he came out, you'll notice that the market started to sell off. So we saw some pretty dramatic changes. The Dow Jones lost just over 1,100 points. The S&P went down approximately 3% or 178 points or so. NASDAQ went down 3.5% or more at 716.37 cents down. So the markets were getting trounced. Now this all really, the markets were pretty stationary and really not doing a whole lot and sort of just sitting there, not doing much of anything until he came out and talked. And the minute he started to talk, especially once the conference came out and he's talked about not raising rates as quickly. At that point, the market started to do a massive sell-off. Now, just about everything was down today, and so silver and gold were also down. Gold was down about $60, and silver was down $1.12, and so these are pretty extreme movements in metals. I wanted to bring up the silver chart because it's really reflective of the Bitcoin chart right now, and I want to sort of give you an idea of what I'm talking about there. I do believe metals are going to continue to move down for a short period of time and then go parabolic here, so I'll try to explain that on the chart and why that's a possibility. Like I say, I'm not a financial advisor. Please do not use my information to make decisions for your finances for your families. I'm just showing you possibilities based on percentages of charts and how patterns play out and how those percentages could affect you. But don't take my advice on this stuff. I do my own trading and things, and so, you know, it's just what it is. I'm just trying to show you where the markets are going and how this might affect you. And it will affect you if you have any kind of loans or credit cards out here. So let's go look at the silver chart and I'll explain what I'm talking about. So I'm going to piggyback two charts here. I'm going to piggyback Bitcoin against silver because it's the same pattern and it's formed basically over a similar amount of time. And we'll go to Bitcoin first because I can draw the lines out better than I can on this chart, and so I believe that I can show you how the patterns formed and what they're going to do if it plays out in the percentage. Now in this case, so when you go to a cup and handle formation, which you can see here a little bit, hopefully I can bring that up, you can see there's a cup with a handle and then it goes parabolic. You go from the top of the brim of the cup to the bottom of the cup and then take that gap, so you move this line to here, and that's where it ends up. And I'm going to show you that this played out almost perfectly. This is a 95% probability, okay? It's extremely high. You're seeing the same thing on Bitcoin. So you need, if you're into Bitcoin or silver or any of these things, you need to be paying attention to what's going on here, and I can show you exactly how this will play out, I believe. Okay, so I've shown you the pattern and what the percentage is. It's 95% probability that this will play out. So look at the chart here. Let's blow this up just a little more so you can see it better. So you got the start of the cup here. It comes all the way down, forms back up almost perfectly, and then forms a handle. Okay, so let's draw the lines out and I'll show you why it's going to end up where it is. Okay, so both charts, silver and Bitcoin, are reflective of each other. They're almost mirroring each other in time right now. So let's look at this chart. So you have your cup, which starts here. Come down, you got the cup, forms up here, you got a handle. Then, as I showed you in the chart, it would go parabolically north. If you take, and I'm being generous here, probably should be more like down around here, but I'm going to the tips. So it just depends on where you're measuring, guys. This is all subjective. It sort of tells you where you want to be. I'm being a little lax on this, but I just want to show you the gap. So you got the top of the cup, you got the bottom of the cup, and you got the gap between the two, which is this line is the same as this line. If I took it down to these, and not the tips of the candles, but just the top of the candle here, which would be approximately around in this area here, doesn't really reflect the top of this one, so that's why I came to this conclusion. Anyway, you take this point, this structure, move it to here, which is your movement up. That's what you normally would see happen, and that's what we saw happen to a certain degree. But what happened? You see it hit a resistance line here. So from the history of this chart all the way through, you hit resistance. So look what's happened here. Same thing happens on silver as every other chart that plays this out. So it comes up, it hits resistance, it falls and it drops. Comes up, hits resistance, then it crashes. Starts to form a cup and handle, comes up, forms the cup, forms the handle, then goes parabolic because it has a 95% chance of that happening. But what happened? It hit resistance almost perfectly at $108, and it's probably not going to go up any higher. Then what happens on this chart? It does the same thing it did here and here. It dumps, probably to support. Depending on where it hits on the support line, it could be anywhere around $25, $26 or so, depending on if my line's correct and how I drew it, you know, to $27, $28, $29, okay? So what I'm saying is you're going to watch Bitcoin probably go from 108,000 or wherever the top of the chart was to approximately 26,000, I'm guessing, depending on where it hits on this line of support. Once it hits on this line of support and we watch the markets completely collapse as we're moving into the Trump process of getting him into office after January 20th, probably an invasion by Turkey into Syria. Russia's been pushing that envelope pretty hard to get a peace brokered deal, as well as you have another tit and tat between Israel, Iran, and then Turkey coming in. You've got a lot going on there. This is probably going to crash and then go parabolic, because why? As everybody's fleeing out of the markets here, they're going to finally end up going into safe havens, okay? Gold, silver, Bitcoin, and other things. The problem with what just happened is, in this chart, as well as silver, not so much silver because you're talking about a metal that's worth, you know, 25, 35 bucks, depending on the range. This is worth $100,000 right now, okay? So it went from, like, you know, down around 65 to 108,000 overnight. Okay, you have a minimum 50% retracement. Okay, well, let's say you go 50% retracement, that's around $80,000, okay? You go to 75, people start really starting to feel fear. You know, if you're smart, you probably get out around 100 grand and just take profit because you went parabolic, and you hope you didn't buy in up in this gap, okay? So you in my opinion, I would sell out, which I have. I'm not in anything right now. And you would wait this thing to dump. Now, look, it's not a straight shot down, as you can see. The markets move up and down as it's collapsing. So there is a swing tradability in here, okay? You can do some cost averaging down, but as you're moving down in here, this is probably not the best time to get in the markets, because if you have some geopolitical or other problem out here, you can watch this collapse. But once I believe it hits this trend, this support line, this trend line, it's going to go ballistic. And I'm hearing conservative possibilities of $250,000 by the end of 2025 due to the geopolitical nightmare that's getting ready to go into possibly the next 4.5 years as we go into an antichrist system. Now look, crypto's not a bad place to be, even though it's digital air. It's not tangible money like silver and gold. But this is the wave of the future, and I don't know if this will be the beast system will be off of Bitcoin and these types of currencies, or they'll create a new one, but it will be a crypto type currency, I believe. So let's go to silver real quick. There's your cup. Start your cup. Go all the way down, come up to the top of the brim of the cup. So you have a movement here. There's your brim. So the movement down would be from here to there. That's the gap of movement on the other end or down here once this completes. There's your handle. So you got the cup into the handle into a parabolic move. Looks just like Bitcoin. Start of your cup. Get to your handle. Goes through resistance. Goes parabolic. Hits resistance. Dumps. Silver. You start at the top of the cup, which is probably around in here, because it went up, then it ended up starting around the cup. This is your brim. You form the cup, come to the handle, you go parabolic, then it dumps. Okay. So if you take, this is just my opinion here, if you go from the top of the cup, which is around $30, to the bottom of the cup, which is around $14, that is a $15 potential correction to the upside. So when you come here and you go to 22, guess what? You end up to $34. Okay, that's pretty close. So that would be a $12 or $13 correction. And that's just eyeballing it here, guys. You know, we're not really blowing this chart up tremendously. So you go from the top, you measure down. Let's blow it up here. We'll look this a little closer. So you got a $30 mark here. You come down, you're at about 13. So that's a $17 movement. Okay. So this could go up. So you went from about $20 to $35. So that's pretty close. You know, $15 movement. But now you're going to dump. And so what's going to happen? If you have a support line, let's say, that goes from here across, and you just freehand draw it, you're going to end up being around probably $20. I don't know. So this could dump even below $25. I've been saying for a while, I think it's a $24.50 to $26.50 based on just the resistance and everything back here. There's some support and resistance line and different things back in this area. So let's say if we go from, I'm just trying to track this out better. If we go from this line here, you slide across to the bottom, you don't use the candle tip, and you slide this all the way over, you're going to end up around $18. So it could go down to support, $18. There's a couple things here I'm looking at. You got these support lines back here, which would be around $26.50. I've been talking about this $26.50 to $24.50 for some time. So that'd be $26.50. When you go down to $24.50 or so, you got a little bit of a resistance here. You got some resistance here. It keeps bouncing off this resistance line here, so that's a possibility, but it could dump down to this around $18 mark. So these are just things to be watching, and it will retrace just as Bitcoin will, I believe. And every time you get these parabolic moves, there's usually a fairly large retracement because, number one, it was such a quick movement. There's usually a 50% retracement on those movements. And normally what you see, as you will in silver, once this goes down to wherever level it's going to end up, you know, 24, $18, wherever that is, finally hits those support lines. So if you're doing cost averaging down, you sort of want to watch that. It will then go parabolic. And so you have a couple things you should look at. So you got a line here of about $35. You got one here. So that's a resistance line. Then you have the top of the chart here at around $44, $45, and then the history of the chart, which would be around $49. So what I'm saying is it could bounce through these multiple resistance lines because there's not a lot of history back here. So once it comes up through 35, it could easily then go up into this 40 range or $38 range in a lot of ways here, depending on how you're looking at it. And then it could go through the roof. And then that dispersion happens where you actually have a correction between silver to gold. Instead of an 85 to 1 dispersion, you have a 15 to 1 dispersion, which is normal. And like I said, if gold were to go, just hypothetically go to $5,000 an ounce, if the dispersion would adjust to a normal dispersion of silver to gold of 15 to 1, which means you can buy, it takes you 15 gold or 15 silver ounces to buy 1 gold ounce, or 15 to 1 dispersion. And right now we're at about an 85 to 1, so it would take 85 ounces to buy an ounce of gold. Once that corrects, so if you had $5,000 gold, you'd have about $333 silver. And think about that alone. So gold's at 2,600, so it would double up, or 2x up. Silver would go from $30 or whatever it's at right now, between 30 to $33, it would 10x up. So that's why I've always been more bullish on gold than bullish on silver than gold, because you're going to get more of a adjustment once we hit this pivotal point of destruction as we're moving forward, because it will you will see that dispersion collapse, and you'll end up with a normal ratio, because it won't be institutionalized anymore. It'll just be people buying up everything at that point. So we're going to look at bonds next, because this really matters. So this is the dispersion between the 2 and the 10. You got the 10 and the 2, and this is the inversion that we had, which was back around July 4th. Amazing. Around July 4th of 2022, we went into this massive inversion that lasted over 800 days, and then we finally came out of the inversion. And then what happened? Jay lowered rates 0.5, as well as he just did 2.5, and what happened? Both times bonds spiked up. They melted up. Okay, so that doesn't make sense, and the markets aren't making sense of it either at this point. Because why, if Jay lowered rates at this point 0.75, would we see bonds melt up? They should be going down. They shouldn't be going up. He's lowering rates. They should be following him. That's not what's happening. And now we're watching reports coming out that they could go up to a 10-year 6% treasury. Okay, guys, I've been talking about this. It could actually go up higher. It could go to 8. It could go to 10. We could be back in the 1970s when you had a home loan at 18%, okay? And this is where we might end up. So let's look at what's going on here. So if in 25 you would have a melt up of a 2 as well as a 10, and this is reflective of the 10-year bond or treasury, that would then send all of your subprime and prime mortgages, car loans, credit cards, commercial, and everything would charge you much higher for borrowing money against the banks. Because what happens is the banks borrow from the Fed at a 2% rate. They loan at a 10% rate. Your business loans fall around a 7-year loan rate, and so they usually will fractionally do that off the 5, depending on the inversion and how much money they can make, or they'll just set a rate. So as of right now, you have a 10-year rate at 4.512, and we just showed you a 30-year fix at 6.93 on average throughout the nation. You move the 10-year bond to a 6% or 7 or 8% rate, that moves that 7% 30-year fixed loan to a 9, 10, 12% rate. Now you're in double digits on your home. your cars and other things, as well as you see massive increases on your credit cards and any other loan that you would have out here through the banking systems. So the 2-year rate's at 4.35 and the 10-year rate's at 4.5 or 4.6, depending on where it is right now. The banks borrow at the 2-year rate, and then they loan you normally at the 10-year rate, unless you're doing a commercial loan, which is usually like a 7-year loan or something, depending on how they're doing it. So what's happening is the inversion has uninverted, but both of these 2 and 10-year bonds are melting up. You're watching potentially, based on what I've been saying, and other people now are saying, that the 10-year could move up to 6, which would then make your 30-year fixed rate go up extremely high, and you would be paying much more, and nobody can reconsolidate, nobody can refinance, nobody can do anything. The problem with this is Jay ended up at like a 5.5% rate, then he lowered a half point or 50 basis points, then he lowers another 25 basis points, so he's now at like 4.75 if I'm right on my numbers, and I may be off 0.25, but anyways, around 4.75. So he's trying to catch up with the 2-year bond, okay, or move back to the 2-year bond so they're matched, because he's following it. So he's 50 basis points still off, and so that's why you keep hearing, he's got at least another 50 basis points of cuts. But the problem is the 2-year's melding up with the 10. So as he's moving down, it's moving up, and they're going to collide, and what's going to happen is the 2-year bond is going to meld up over his rate, and then he's going to have to re-raise rates, okay? Which is what they're fearing, because he doesn't want to lower and then re-hyperinflate the economy and then have to re-raise rates because the 2-year bond and the 10-year are moving up, melding up, and he has to keep following them. That shows a lot of fear in the markets, and it shows uncertainty on the Fed, and that will send fear through the markets, and they will do a massive sell-off and then go into commodities like gold, silver, and Bitcoin. So if you end up, let's say, with a 6%, we'll just go with their numbers, 6% 10, you're going to probably end up with a 4.5 to minimum 5% 2. So because the banks have to make money, they're going to charge you, because the 10 years at 6, they're going to move that to 8 or 10 or 12, depending on the regional bank or whoever you're using. And so you're going to be paying twice what you were before Joe Biden came in on these mortgages. So who's going to afford a home at that? Who can finance a home at 8, 10, 12% rates? It's not going to happen. So this new generation coming up is not going to have the ability to go out and buy homes, as you have a medium home price of approximately $404,500. So let me say this, and then I'm going to stop before I blow my steam here. So Jay came out the other day and said, I'm not worried about inflation. And the woman that he was doing the interview with questioned him on that. She says, well, what do you mean by that, Jay? You're not worried about inflation. So I'm not worried about inflation because we're going to move wages up to inflation and sort of offset the, because inflation's entrenched. So we're moving wages up. Okay, so you move wages up to inflation. You don't bring inflation down, and you melt these bonds up. What is your house price going to be in the next few years? And who can afford that while you have rates at 8, 10, 12%? So these could easily double in a matter of a few years. The other thing I wanted to bring to your attention, so institutions like Janet Yellen have done a tremendous amount of damage to our economy. So this woman came into office on October 9th of 2013. Why is it always October 9th? My birthday. It always seems weird things happen on my birthday. Anyway, she came in on October 9th of 2013 to replace Bernanke. Okay, so since she's been in office since 2013 and run pretty much the Federal Reserve, She has added approximately $20 trillion to our budget, our national debt. Okay? She came in at 16.7 trillion. She finally retires and leaves because Trump comes in at $36.2 trillion. And what has she been doing? She's been printing about $1.5 to $2 trillion in treasuries to fill the gap between the revenues that they're coming in and the money that they're spending. So there's your gap difference. That's what Janet Yellen's whole process was, to fill the gap between the money we bring in, sell treasuries to everyone in the world to fill the gap of the $2 trillion that they overspend every year. So this woman came in at 16.7 trillion and leaves at 36 trillion. She has added $20 trillion to the budget by the time she's been in there since 1993. That is pathetic, and she should be held accountable for some of that, but that's never going to happen. In that same breath, you have, based on their calculations, $107,076 debt per citizen, or, because not everybody pays taxes, taxpayers owe $271,790. That is your share. If you're a taxpayer, that's what you should have to pay the government. We are now at a ratio of a 123.41% debt to income ratio. So we're in the hole. We overspend ourselves by full revenue. We overspend ourselves by 23.41%, and you can tell it's pretty hard to fund these types of programs when you have a national debt that is so extreme. Now, if you take this into a time machine and you go into 2028, look at that. 2028 is 51 trillion in the hole if they can't slow this down. So that's why Trump's trying to cut $2 trillion out of the debt of the budget per year to try to offset some of this hemorrhaging, and then look at the amounts of money that you would actually owe the government for this overspending, and look at the gap. So they would bring in about 7 trillion and they would spend about 12 trillion. That's a almost 5 trillion difference in gap, with a 157% GDP to debt ratio. It's insanity out here, guys. That's why they have to do a reset. They'll never be able to pay this off. And if you go into actual total debt across the world, they're talking up in the 350 to 400 trillion dollar marks. Because this is just federal debt. This isn't state, local, all the other debt that runs through the systems. So we're getting ready to watch Bitcoin dump under 100,000. Once it dumps under 100, we're going to watch it go to the races. I don't know how fast. There's no way to actually chart the decimation that's getting ready to happen. I can sort of give you an idea. It's probably going to be ugly. It's probably going to be around 26,000. Got a similar pattern on silver also that's playing out. So you're going to probably down, you could be down between, I'm still saying between 26, 24, but this could really dump down to like 20, 18 bucks, and then it will go through the roof. So that's just sort of where that can, just taking to the places this could go. And it's just my opinion based on the charts. Then you have a massive strengthening of the dollar. Okay, this is a real problem for the emerging markets and their loans that they have to place out on their populations, because think about it. If our rates are where they are, theirs are much higher, and they're paying much higher rates, double digits already in most cases. Okay, Sort of keep your eye on the 10-year rate because that's what you pay your loans on. And so as it moves up to 5 and 6 or higher, that is going to cause you all kinds of problems, especially if you have to refinance a balloon loan or anything as you move forward. This is the problem because you're going to go in, you're probably already strapped on this loan. You're going to go in, reconsolidate, redo this loan, and they're going to look at you and go, you either can't qualify, we won't loan you the money, or it's a lot more than what it used to be. That's why no one is selling their houses right now. Why would you when you're locked into a 3.5%, 4 or 5% rate when it's going to go up to 8, 10, or 12? It's just not going to happen. And so the supply in homes are not going to be out there, and that then keeps the price of homes elevated. And so that's why you're paying these absorbent amounts of over $400,000 on a median average of a home out here. So between Mr. Powell and Mrs. Yellen, we've seen a lot of carnage go off, and Trump's going to hold this guy in place. I think he's going to hold him in place because I think he's going to make him answer for some of this stuff. As we get into this new cycle, he's going to have to pin him down on this, and Jay's going to have to answer why this is breaking down in front of Trump. And he's going to put him on the hot spot. That's my guess. Why would you let this guy off the hook? Jay doesn't want to leave anyway because he feels important. So, you know, it is what it is, guys. Anyway, I wanted to bring these things up to your attention. I believe this is where it's all going. I may be wrong in a lot of cases because the charts are charts and they work out in a very specific manner, okay? But if you go into charting of markets and things based on whatever stock, money, gold, whatever, it doesn't matter. Charts are charts. They play out in patterns based on the history of the charts, and you watch them play out, you can actually start to understand what's getting ready to happen. So you can sort of see what's coming up in the future, which is sort of interesting because the Paradigm 2030 chart is a similar thing. It's built in history that's going to play out in the future. So all these things are getting ready to happen. We will see how the charts play out and whether the percentages of the charts are accurate. But in this case, in the cup and handle situation, it's a 95% possibility that it will play out. So I just wanted to bring this report to you. A lot going on until Trump gets in here. A lot going on once Turkey invades Syria, and the aha moment there that the world will turn on a dime and realize that the world has changed is when Erdogan invades into Syria and Iraq. From Syria, he will then go down into Lebanon pretty much overnight because they just absorbed that whole area with the Free Syrian Army and the Turkish-backed groups that were there, and so they built Erdogan a corridor down into Lebanon, and it's not a big gap of territory. So he will drive into Syria, into Lebanon, and then all of a sudden we're going to realize that they're heading towards Israel. That is a game changer. So God bless everybody. Get right with the Lord Jesus. He is the only open door. If you do not believe in the Son of God, in the true Son of God that was sent down here, crucified, killed, raised, and then gave us the capacity to get to the next level of existence through his open door, it's not going to matter. Okay, I can tell you all this stuff, you can survive it all, but if you don't believe in the Son, it won't make a bit of difference. Okay, your goal in life is to do the Great Commission, bring souls to this side. Don't go out and fight a holy war with guns and stupid stuff like that, because that's not what Jesus did. He went out to save souls, not to eliminate the threat that's getting ready to come upon us. Okay, and that threat will hit you like a train. But that's not your goal. Now, you have the right to defend yourself and the people around you, yes, from a tyranny that's coming in and defending innocence. You have that right. But this one's going to get ugly soon. And on my chart, if you go back and look, Iran falls as a nation around January 26th. So the whole Middle East will be consumed by then. So get ready for the ride. The next 3 to 6 months are going to be terrible. Once you have a 1973 type oil embargo, the whole game changes over here, regardless of what's going on in the Middle East. Fuel will affect us. Oil barrel price will destroy this economy. And after the first year, I think we're going into stagflation anyway. So God bless. Have a great night.